Welcome back, everybody, to the Deep Dive. This time, we're taking a deep dive into Reliance Industries Limited. I'm sure some of you have heard of them. They're kind of a big deal in India and well beyond. We've got their latest annual report and a whole bunch of other documents to help us make sense of it all. Just to give you an idea of the size of this company we're talking about, a market cap of 20,000 crore. Yeah, you heard that right, 20 trillion rupees. That makes them the 48th most valuable company in the world. And it puts them at number 86 on the Fortune Global 500 list. So yeah, they're a pretty big deal. But what's really fascinating about Reliance is that they're not just big, they're also incredibly diverse. They're involved in everything from oil and gas to retail to digital services to media to entertainment. And they're making a big push into green energy too. They've set a goal to be net carbon zero by 2035. Talk about ambitious. Now, to help us navigate this massive company and all its complexities, we've got an expert on board who can break down the financials and strategies in this report. Welcome.
Thanks for having me. I'm excited to dive in. Reliance is always such a fascinating company to analyze.
Okay, so let's start with the industry landscape. The report highlights some pretty impressive growth potential in the sectors Reliance operates in. What stood out to you?
What's really interesting is how closely Reliance's growth is tied to India's own economic growth. Take the gas sector, for example. The report projects that by 2030, gas will account for 15% of India's energy mix. That's up from just 6% today. And Reliance is already a major player in India's gas production. They produce about 30% of all the gas produced domestically. So as India's demand for gas keeps rising, Reliance is in a great position to benefit.
It's like they're playing 4D chess or something, always thinking several moves ahead.
Exactly. And it's not just gas, they're also tapping into the growing demand for polymers in India. The construction, automotive, and packaging industries are driving a projected 6–8% growth in polymer demand over the next year.
Wow, so they've got their hands in a lot of different pots, and all those pots seem to be getting bigger. What about their digital ventures? I know they're making some serious waves in the telecom and digital services space.
Absolutely. Their subsidiary, Reliance Jio, is a real powerhouse in the Indian digital landscape. The fixed broadband market in India is booming, growing at about 20% year on year, and Jio is looking to capture a big chunk of that market. They're doing that with their fixed wireless solutions like Jio AirFiber.
And then there's JioCinema, their OTT platform. They've been making some pretty bold moves to secure their place in the streaming wars.
Oh, for sure. They're really outmaneuvering the competition by getting the rights to popular content. And they've locked down some major sporting events like the IPL. The Indian OTT market is exploding, and JioCinema is right there at the forefront.
It seems like they really thrive in a competitive environment.
Mhm.
What does the report say about their overall approach to competing in all these different industries?
The management discussion and analysis section of the report lays out their key strategic pillars. Diversification is one of the big ones. They're not putting all their eggs in one basket. Instead, they're spreading their investments across a range of industries to mitigate risk and capitalize on multiple growth opportunities.
That makes a lot of sense considering the sheer breadth of their operations.
But diversification alone isn't enough. They're also masters of integration. They connect their different business segments to create what they call a purpose-driven ecosystem.
I love that term, purpose-driven ecosystem. Can you give us an example of how this integration plays out in practice?
Sure, think about their retail stores. They actually serve as a distribution channel for Jio's connectivity services. That gives them a huge physical presence and direct access to millions of consumers. At the same time, their digital platforms like JioMart leverage their retail infrastructure for things like delivery and fulfillment. It's a brilliant synergy that benefits both sides.
It's like a well-oiled machine. Every part is working together in perfect harmony. What else is in their strategic playbook?
Cost leadership is another key element. They're constantly optimizing their operations to keep costs low. This allows them to offer competitive pricing and capture market share.
Diversify, integrate, and keep costs low. Simple, but effective. The report also talks about their focus on technology and consumer-centric platforms. How does that fit into the bigger picture?
They're not just riding the digital wave, they're actively shaping it. They're investing heavily in things like 5G, artificial intelligence, and cloud computing. These investments allow them to create platforms that are not only convenient for consumers, but also generate valuable data that can be used to optimize their operations even further.
So they're using technology to anticipate future consumer needs and stay ahead of the curve. Smart. Now, let's take a closer look at their core businesses. Can you give us a quick rundown of their major revenue streams and how they're positioned in each market?
Absolutely. Let's start with their biggest moneymaker, oil to chemicals, or O2C as they call it. This segment covers everything from transportation fuels and polymers to intermediates and polyesters. They own a massive integrated refining and petrochemical complex, which gives them a huge advantage in terms of scale and efficiency.
So they're like a one-stop shop for all things petrochemicals.
You could say that. Now, their oil and gas exploration and production segment focuses on, well, exploring for and producing oil and gas. They're a big contributor to India's domestic gas production, and they're planning to increase production at their KGD6 block to a whopping 30 mmscmd.
30 mmscmd, that's a lot of gas. What about their retail empire? They're a pretty dominant force in that space, right?
Reliance Retail is actually the largest retailer in India. They have a massive network of over 18,000 stores, covering something like 79.1 million square feet of retail space. And they're not stopping there. They're constantly expanding both online and offline. And they're using their digital expertise to create a seamless and engaging shopping experience for consumers.
It's amazing how they've managed to achieve such dominance in such a competitive market.
It really speaks to their strategic vision and execution capabilities. Now let's move on to their digital services segment, which is spearheaded by Jio. As we discussed earlier, they're a leading provider of connectivity and digital services in India. They hold a market-leading position in both wireless and wireline services with a massive subscriber base of 481.8 million. They've successfully rolled out their 5G network and are rapidly expanding broadband access with Jio AirFiber.
They're definitely covering all the bases in the digital realm.
Yeah.
But what about their foray into media and entertainment?
They own a diverse portfolio of media assets, including popular television networks like Colors and Star Plus, digital news platforms, and of course Jio Cinema. They're essentially building a comprehensive media ecosystem that caters to a wide range of audiences.
The sheer scale of Reliance's operations is mind-blowing. It all seems to tie back to this purpose-driven ecosystem they emphasize in the report. Can you tell us a little more about what they mean by that?
Sure, it's basically about creating a network of businesses that work together in synergy, all striving toward a common goal, generating sustainable value for stakeholders and contributing to India's economic growth. It's not just about profit, it's about creating a positive impact on a large scale.
So they're building this interconnected web of businesses, all working together to achieve a larger purpose. But how are they actually performing financially? Let's get into the nitty-gritty of their numbers.
Now we're talking. Get ready to dive deep into those financial statements. We'll explore the profit and loss statement, the balance sheet, the cash flow statement, and we'll take a look at those key financial ratios that really tell the story behind their success.
All right, listeners, don't worry. We'll be your guides through this financial jungle. Stay tuned. Okay, so we're back and ready to tackle those financial statements. You know, I always get a little intimidated by numbers, but I'm sure you'll make it easy to understand.
Of course. Financial statements are just a company's report card. They tell us how the business is doing. Let's start with the profit and loss statement, or P&L. It shows us Reliance's revenues, expenses, and of course, their profitability.
So how do they do? What's their grade?
They aced it. Reliance had a very strong year. Their revenue was over 10,122 crore.
Wow, that's a lot of zeros. How much is that in US dollars?
That's a staggering US $119.9 billion. And get this, it's a 2.6% increase from the previous year.
Wow, that's impressive. Where did all that revenue come from? What were the biggest contributors?
Well, their retail and digital services segments were the real stars. They had amazing growth rates of 17.8% and 11%, respectively.
It seems like their investments in technology and those consumer-centric platforms are paying off.
Absolutely. And another key indicator of their profitability is EBITDA earnings before interest, taxes, depreciation, and amortization.
EBITDA? I've heard that term before, but to be honest, I'm not entirely sure what it means.
You can think of EBITDA as a measure of their core operating profitability. It basically shows how much cash they're generating from their operations. Reliance saw a really healthy growth in EBITDA, 16.1% to be exact.
That's fantastic. And did all of their segments contribute to that growth?
Yes. Every single business segment contributed to that growth, which is a really good sign.
That's a great sign of a well-balanced and resilient business model. It's not just one segment carrying all the weight. So what were the key drivers behind this impressive growth?
Strong consumer demand played a big role, particularly in the retail and digital services sectors. And their strategic initiatives, like the rollout of 5G and the expansion of their retail network, also helped a lot. They've really tapped into what Indian consumers want.
Okay, so we've looked at their profitability. Now, what about their balance sheet? Isn't that where we see their assets, liabilities, and overall financial health?
Exactly. It's like a snapshot of their financial position at a particular moment in time. And Reliance's balance sheet is looking pretty good. Well, their net worth is 7,042,922 crore, which points to a strong financial foundation.
That's definitely a good sign.
Yeah.
Did the report mention anything about how they're managing their debt?
Yes, they're taking a very strategic approach to financing. For example, they've secured US $2.83 billion in ECA-supported facilities to fund their 5G rollout.
ECA-supported facilities. Can you explain what those are?
Sure, those are essentially government-backed loans that help companies get financing on better terms. It shows that Reliance has access to capital at competitive rates, which is crucial for funding their ambitious growth plans.
So they've got a solid balance sheet and access to affordable capital. What about their cash flow statement? How are they doing in terms of managing their cash?
Reliance is excellent at generating cash flow from their operations.
So that means they're not just profitable on paper, they're actually bringing in the cash.
Precisely. That cash flow is essential for reinvesting in growth, paying dividends, and meeting their financial obligations.
Speaking of investments, where are they putting their cash to work?
The report highlights significant investments in property, plant, and equipment, especially in their green energy initiatives. They're serious about their sustainability goals.
That's great to hear. Now let's talk about those financial ratios. I know they can be a little intimidating, but they give us some really valuable insights into a company's performance. Are there any particular ratios in the report that we should be paying attention to?
Absolutely. Let's start with return on investment, or ROI.
So the higher the ROI, the better.
You got it. ROI measures how effectively a company is using its investments to generate profits. For a company like Reliance, with its huge portfolio of businesses, having a strong ROI is super important.
Makes sense. What other ratios should we be looking at?
Another important one is EBITDA margin. Remember, we talked about EBITDA as a measure of core profitability. Well, EBITDA margin tells us what percentage of revenue is left over after covering operating expenses. The higher the margin, the more profitable their core operations are.
Okay, I'm starting to understand this ratio stuff.
Yeah.
What about their debt levels? Is there a ratio for that?
Yes, there is. The net gearing ratio compares their net debt to their equity. It basically tells us how much debt they're using to finance their assets. A lower net gearing ratio usually means a healthier financial position.
So looking at all of these ratios and financial statements, what's the overall picture? How would you describe Reliance's financial health?
Overall, Reliance is in excellent financial shape. They're generating strong revenues, managing their expenses well, and have a solid balance sheet. Their strong cash flow allows them to invest in future growth, particularly in green energy.
That's fantastic to hear. But with all this talk about numbers and strategies, it's easy to forget there are actual people behind this massive company. Who are the people leading Reliance to success?
Well, Reliance has a really interesting history. It all started with their founder, Dhirubhai Ambani. He was a true legend of Indian industry.
Yes, he built quite an empire. And now his son, Mukesh Ambani, is running the show, right?
That's right. Mukesh Ambani is the chairman and managing director. He's been a key figure in shaping Reliance's growth and diversification strategy.
And I've heard that his children, Isha Ambani and Akash Ambani, are also taking on more prominent roles in the company.
Exactly. They're stepping into leadership positions and helping to guide Reliance into the future. The annual report actually includes profiles of all the key management personnel. If you're curious to learn more about their background and expertise, you can find it all there.
I might have to check that out. Now let's switch gears a bit and talk about risks. Every business faces challenges, even giants like Reliance. What are some of the potential risks that the report highlights?
Even the biggest ships can be rocked by a storm, and Reliance is no exception. Geopolitical turbulence and natural disasters are always a concern, especially for a global company like Reliance.
That's true. The world can be a pretty unpredictable place. What other risks are they worried about?
Cybersecurity threats are a big one these days. With their vast digital infrastructure, Reliance is a prime target for cyber attacks. The report acknowledges this risk and emphasizes the steps they're taking to strengthen their cybersecurity.
A data breach would be a nightmare for a company of their size. Are there any other risks on their radar?
Regulatory changes are another thing to keep in mind, especially in a rapidly evolving market like India. The report mentions the potential impact of changes in data privacy regulations, spectrum allocation, and renewable energy policies.
So they need to be adaptable and ready to adjust to the changing regulatory landscape.
Yeah.
What about competition? I'm sure they face some pretty stiff competition in certain sectors.
Competition is a fact of life for any business, and Reliance is no stranger to it. They operate in highly competitive industries, so they need to constantly innovate and stay ahead of their rivals to maintain their market leadership.
It sounds like they're playing a high-stakes game of chess, always thinking several moves ahead. But it sounds like they're up to the challenge. The report mentioned their proactive approach to risk management. Can you tell us more about that?
They have a very robust risk assessment and mitigation process. They identify potential risks, analyze their impact, and develop strategies to minimize those risks.
So they're not just crossing their fingers and hoping for the best. They're actively preparing for potential problems.
Exactly. They're also focused on building resilience and ensuring business continuity. This means they're prepared to handle any disruptions, whether it's a natural disaster, a cyber attack, or a sudden shift in the market. They're always thinking about how to keep things running smoothly, no matter what comes their way.
That's reassuring to know. Now, let's look ahead. Where is Reliance heading in the future? How are they going to maintain their impressive growth and valuation?
Reliance is definitely not sitting still. They're making big investments in key areas, like expanding their retail network and digital platforms, and they're continuing to develop their oil and gas assets.
I'm really intrigued by their push into green energy. They've set a bold target of becoming a global leader in this space.
They have. They're putting a lot of resources into renewable energy technologies. Everything from solar and wind to batteries and green hydrogen. Remember their goal of achieving net carbon zero by 2035. They're putting your money where their mouth is.
It's great to see a company of their size taking climate change seriously.
It's definitely a move that's getting a lot of attention. These strategic investments, combined with their strong financial performance, their growth potential, and their capable leadership team, all contribute to their high valuation.
Reliance has a bright future, that's for sure.
I can't wait to see what they do next. Now, there's one more topic I want to touch on, and it's something that often comes up with big conglomerates like Reliance: related party transactions. Can you explain what those are and why it's important to pay attention to them?
Related party transactions happen when a company does business with another entity that has a close relationship with them. This could be a subsidiary, an associate company, or even a director's family member. It's important to scrutinize these transactions because there's always a possibility of conflicts of interest.
So transparency is key. We need to make sure these transactions are fair and benefit all stakeholders. What kind of related party transactions does Reliance disclose in their report? One notable example is their joint venture with Star India. Private Limited Reliance invested a significant amount of money in this venture, 11,500 crore to be precise. It essentially combines their media and entertainment businesses.
Oh, right, the merger of Viacom 18 and Star India. That was a big deal in the media world.
It was. And another example is the content licensing agreements between Geo Studios, which is their content production and acquisition arm, and Star India. It shows how different parts of the Reliance ecosystem can work together, even when related parties are involved.
So they're leveraging their internal network, but hopefully in a transparent way that benefits everyone.
The report assures readers that all of these transactions are carefully reviewed and approved by the board of directors and the audit committee to make sure they are conducted fairly and in the best interests of all stakeholders.
That's good to hear. Transparency and accountability are essential in these situations. But we've covered a lot of ground today, from Reliance's vast operations and their vision for the future to their financial performance, the risks they face, and their commitment to sustainability. It's been quite a journey. It's been an incredible deep dive. I mean, Reliance is doing so much. It's hard to wrap my head around it all. What really struck you?
I know what you mean. I think what's most impressive is their sheer ambition. They're not just content with being a big company. They want to be a transformative force in India and beyond.
Exactly. And they're not just focused on profits either. They're really committed to social responsibility. They're investing in things like education, healthcare, and women's empowerment. It's really inspiring to see a company of their size prioritizing social impact along with financial success.
Absolutely. They understand that their long-term success is tied to the well-being of their stakeholders and the communities they serve. It's a very holistic approach.
So what's next for Reliance? Where do they go from here?
That's the big question, isn't it? They've got all these ambitious plans. They're investing heavily in growth, innovation, and sustainability. But with their massive investments in green energy and their focus on building this purpose-driven ecosystem, it makes you wonder, what role will Reliance Industries play in shaping the future of India? That's something I think we all need to consider.
That's a great question. And I think it's one that's going to be debated and discussed for years to come. They're a company that's making waves, and I, for one, am excited to see where they take us. If you're as fascinated by Reliance Industries as we are, I highly recommend checking out their full annual report. It's packed with even more detail and insights than we could cover today. And if you want to delve even deeper, we'll be sure to include some additional resources in the show notes. Thanks for joining us on this deep dive into Reliance Industries Limited. Until next time, keep learning, keep exploring, and keep diving deep.